But that sliding door moment, right? If I hadn't have decided to do that, then I wouldn't have gone away, and I wouldn't have then been in the same year level as Leigh, and I wouldn't have met my wife. I wouldn't have probably started Aconex. All these things come from like really small decisions in your life. And it's crazy to think about how much things could be different on the back of really, I might not have been there that day, might not have heard about it, or whatever it might be. But yeah, sliding door.
Hi everyone, I'm your host Rohit Bhargava, and you are listening to episode 213 of the Startup Playbook podcast, a weekly series where I sit down with successful tech founders, investors, and operators to unpack their journey, lessons, and insights to help current and future entrepreneurs. My guest for today's episode is someone who's had a huge role in shaping Australia's tech landscape, and that is Rob Phillpot. Rob and his co-founder Leigh Jasper built Aconex into one of Australia's most iconic companies, which went public in 2014, before eventually being acquired by Oracle for $1.6 billion in 2017. Since then, he's dedicated his time in advising startups, supporting philanthropy, and investing into early-stage companies through his family office, Gravel Road Ventures. Most recently, Rob teamed up with Leigh Jasper and a Cloud Guru co-founder Sam Kroonenberg to launch Glitch Capital, a $50 million founders fund to invest into the next generation of global tech companies. In this episode, we covered a wide range of topics, including the real story behind Aconex and how they overcame multiple near-death experiences, what it was like having to sell the company when they didn't want to, why advising startups is 20% strategy and 80% psychology, balancing his ambitions with family life, what Glitch Capital looks for when they invest in startups, and much more. Without further ado, here's my interview with Rob Phillpot. Hi Rob. Welcome to the Startup Playbook podcast, and thanks so much for taking the time to be on the show today.
Thanks, Rohit. Great to be here.
I've been wanting to do this episode for a really long time. I've obviously had your co-founder Leigh on the show a couple of times, but glad we can finally meet and make this happen.
It's been a long time coming.
Yeah, but Rob, for those people that may not be as familiar with you and your story, do you want to share a little bit about your background and what got you here today?
Wow, where do I start? If I go way back, like out of school, I started being an accountant. Not because I ever wanted to be an accountant. I knew that wasn't my path, but I knew that it would be something that would be useful. But always knew that I wanted to be in construction, because construction was, I suppose, one of those industries where you have a really tangible delivery at the end of a project. And I love that, the pride you get out of looking at something and going, wow, we helped build that. And eventually, through uni, did building at uni, and then ended up working for Multiplex. And that's kind of where the Aconex journey started. So Leigh and I were friends from school. We were at boarding school together, knew each other for quite a long time. And back then, when we'd finished uni and started work, he was at McKinsey studying all the, this new thing called the internet and how it was going to impact companies. And I was at Multiplex, loving my job, but frustrated with all of the inefficiency and all of the fighting and all of the tit for tat that went on projects. And that's where the genesis for Aconex came from. Leigh and I were playing squash one day at uni, and he was talking about the internet, and I was talking about all the challenges at work, and it was like, well, why don't we set something up? And it was really a moment in time where the internet, or the birth of the internet, which only happened not long before that, had kind of enabled this kind of tool, because we were a web-based SaaS tool before SaaS was even a word. Like the word SaaS, the word cloud didn't exist. There was no AWS to build tools on, but we knew that we had to be a browser-based tool that wasn't installed inside a company firewall. And because we needed to bring all the companies on a project together to share information, and that's where it started back in 2000. Well, actually, late 99 was when we started talking about it, but 2000 is when it kind of kicked off.
Yeah, incredible. And there's so many different parts of the journey with Aconex that I want to get into, and obviously what you're doing now with Glitch as well. But maybe going back a little bit further, I was just mentioning this a little bit before, so I did speak to your dad as research for this interview, and he kind of mentioned that you had this entrepreneurial streak about you and just initiative about getting things done. He did tell me a story one time where he sort of looked out the window and saw a motorbike being unloaded.
Yes. Yeah, when I was, I don't know, maybe I was 11, something like that. We lived in country Victoria in Warrnambool, and I decided I wanted a motorbike. And rather than kind of pester my mum and dad for one, and because I knew they'd probably resist, but also, I thought if I wanted it, I should do something about it. So saved up money, and I didn't have quite enough, but I went down to the motorbike store and knew the guy that ran it, because it's a small country town, right? Convinced him that I could put down a deposit and then pay off the remaining $200 in installments over the next 9 months, which he agreed to. It was great. And then he assumed that I had mum and dad's kind of blessing for this. And then when he delivered it that afternoon and took it off the ute, mum and dad were like, "What? it was done at that point. So I had my motorbike.
Yeah, that's incredible. Where do you think, and obviously your dad kind of spoke about a lot of the traits that you kind of had growing up as well, but where do you think a lot of that sort of initiative and just hustle sort of came from for you?
I don't know. I mean, maybe my parents are kind of entrepreneurial in their own way as well, right? So my dad, he ran a business for a long time. He was kind of a partner at an accounting firm. Mum, she's someone I highly respect when it comes to, she's a very strong woman. She's capable of doing anything, right? She was mayor of Warrnambool for 9 years, I think. She's done a range of things over her journey that, she's just, her attitude is very, very resilient, very try it. And they kind of did encourage me growing up to, mistakes were okay, but you had to kind of own them. I remember one time I got a remote control car for Christmas, and it was okay, but it was, I feel bad talking about this now, but because I was kind of like a bit disappointed because it wasn't that fast, right? So I pulled it apart playing with it to try and kind of, I don't know, razz it up a little bit, and in the process kind of burn out the engine. And I told Dad about it, and rather than kind of be like angry about it, he was like, "Oh, well, you screwed that up, didn't you?" And then walked away. So it's kind of like, you made a mistake, but I'm not going to get angry at you, but you're going to deal with the consequence.
Yeah. Something else that stood out from that whole experience is, I think that you and Leigh met in high school.
Yeah.
Was it?
Yeah. Yep.
I guess, did you guys know, I think sort of meeting your co-founders is such a pivotal sort of part of that process. And everyone says, like, look to your friends first or people within your network around those sort of things. I guess, did you guys both know at that stage that, you would eventually want to do something together and kind of work? Because from what I understand, when you were at uni, your sort of paths diverged a bit.
I mean, we both had a desire from a very early age, I think, to do something where you weren't working for someone else. I think that was just innate in both of us. Certainly was in me. I think I saw it quite strongly in Leigh. And Leigh's dad was, he had lots of little businesses. He was also a parliamentarian, but he had he had a bus business and a petrol station and a range of things. So he was very much working for himself. And then Leigh and I were friends, but we were actually a year different at school. He was a year below me. And we were friends as much as a person in a different year level can be. But we're in the boarding house together, so that kind of throws you together as well. But it was later in our journey at high school that we became really good friends. So there's a bit of a story around this. So after year 11, I decided to do an exchange overseas. So I went to Norway for a year. So that was during what would have been my year 12 year, and then came back to then do year 12. And because I came back a year later, I was now in the same year level as Leigh. So we ended up in year 12 together, and that's kind of where our friendship really started to take off. And we did year 12 together, and on the end of that, he thought that what happened to me doing exchange was really good. I think he said, you went away a bad bloke and you came back a slightly better bloke, or something like that. And so he decided that after year 12, he was going to go off on exchange. So he went to Switzerland after year 12 before he started uni. And he stayed with a family, which one of the daughters is now my wife. So kind of he often says that he found me a wife, which is, I suppose, kind of true. But it was all those sliding door moments, like all this stuff. Like I remember the day that the person came into the classroom to talk about exchange programs. And I remember just one of those instantly, like, yeah, I'm going to do this. Like it wasn't like I wasn't kind of wringing kind of my hands over whether I should or shouldn't. And I just rang up Mum and Dad that night and said, hey, I'm going to go on exchange. Like, again, I already decided in my own head. But that sliding door moment, right? If I hadn't have decided to do that, then I wouldn't have gone away, and I wouldn't have then been in the same year level as Leigh, and I wouldn't have met my wife. I wouldn't have probably started Aconex. All these things come from like really small decisions in your life. And it's crazy to think about how much things could be different on the back of really, I might not have been there that day, might not have heard about it, or whatever it might be, but yeah, sliding door.
Speaking of sliding doors, one of the things that you mentioned was obviously your dad had an accounting business and had a profession in that career. You were doing that as well, but you knew that it wasn't right for you. And I think I have seen so many people just kind of stay in a career because that's what they studied, and they're like, well, I've invested all of this time, like, I don't really like it, but it's tough for me to leave. And obviously that was such a pivotal moment into you sort of moving to construction and, that experience that you kind of got leading to Aconex. But again, do you have any advice for people that are kind of in that spot, or just how to think about some of those sort of things in general, where obviously the sliding doors moments make sense in hindsight, but when you're in that moment, it's a little bit more difficult to kind of make those decisions?
Well, for me, doing construction wasn't a later on, oh, maybe I should do it. I went into uni, even though I started with accounting, knowing that I was going to do construction as well. But you kind of had to start, because that wasn't offered as a joint degree back then. It is now, but back then it wasn't. So I had to kind of navigate that path of letting uni kind of let me into both courses. But the way I thought was the easiest way is to get into the course with the highest ATAR, get in. Once you're in, then it's a lot easier once you're in. So I thought I did the whole 2 year. Well, I was actually doing a cadetship with Deloitte at the time, so working full-time, studying part-time. But as soon as that 2 year cadetship finished and I went back to uni full-time, that's when I kind of applied to get into building as well and went down that path. So for me, it wasn't really wringing my hands thinking about what I should do about it. But I know I just think if you've got a view about what you want to do, kind of sounds easy when you say it, but I've got an attitude of, if you want to do it, do it. Don't kind of sit around pining about it or wondering what might be. Like the best thing to do is just get on with it. And that's always been an approach I've had.
Yeah. And, obviously the world is kind of like very different now than it was back in sort of 99, 2000 when you guys were initially sort of thinking about Aconex. You spoke about some of the more kind of technical structures that were there, but I'm thinking even for me, when I sort of launched my first startup 12 years ago, trying to tell my Indian parents that I was leaving engineering to start a fashion tech company is a fun conversation to have.
Yeah.
They were okay with it, but my friends held an intervention for me. I'm like, what are you doing? And I imagine that must be like even more challenging.
I'm imagining like the movie Bend It Like Beckham. I'm imagining that.
There's a lot like that. But imagine sort of going back even further to sort of early 2000s where you don't have all the structures in place. You don't have those playbooks. You don't have all this content and resources and mentors and all those sort of things. What was that early part of that like for you and Leigh? And I imagine you guys were pretty, young at the time, 26?
Yeah, we were 26 when we started. So young, but also we were young and dumb, right? Like you don't know what you don't know. And I think we had that combination of a bit of naivety and the confidence and a bit of hustle and kind of all of that kind of allowed us to navigate. But it was tough. The early years were tough, and there were moments where we kind of questioned whether we should continue or not. Actually, there's one time I can remember quite vividly. We were early in the journey and we were going out to shareholders to try and get kind of funding for this. And we had also pitched the idea to all the top tier 1 construction companies is like, this is what we're doing. If they're not involved, we didn't want them as investors, but we wanted them as customers, right? And so we were pitching it to these investors, and there was someone who was kind of helping us out a little bit, and they went up to Sydney to meet with one of the tier 1s just to kind of do a bit of research. And Leigh and I were in Sydney at the same time, and they met up with us afterwards and said, you guys should just give up. Like Lynn and Lise have just told us that you guys aren't going to own this or run this. This is something that the contractors want to do themselves. They've got all the money, they've got all the resource. You just should walk away now. It's a waste of time. And I remember sitting with Leigh on a bed in Sydney, kind of looking at our feet for quite a long time, like dejected, kind of shoulders hunched. And but it didn't last long. It lasted like 2 minutes, and we both kind of almost simultaneously went, screw this, let's keep going. And we, on the back of that, kind of got another spark of energy for it, another bit of, and I think you could have easily given up at that moment, but I don't know, for whatever reason, I don't know what it was that flipped in our mind, but we just kind of went, let's keep going. And those things I think you need to kind of get over, because it's never a linear path. It's never a smooth path, and you have to push through the bits where you doubt yourself a little bit. It's lucky that I just didn't doubt myself very much.
Well, I mean, that's kind of one of the things on the outside looking in. It's like, oh, of course, this is so obvious, looking at the journey that you guys have had. Of course, it kind of makes sense. But, even speaking to some of the team members that kind of worked at Aconex, even when they joined a couple of years into the journey, they were like, we still weren't sure whether this is going to work out.
Yeah.
What I guess, what did that look like for you and Leigh in terms of keeping that positivity and keeping that things going when things maybe aren't necessarily ticking? And was there a particular inflection point for you guys to go, oh, actually, I think that there's something really here for us?
Well, I mean, again, this is before we even had our first employee. We didn't have a line of code. And I remember having one meeting, and this is how naively confident you are. I remember coming out of the meeting into the lift, and as soon as the lift door closed, turning to the left and saying, this is going to work for sure. Like, so naive thinking about it now. But anyway, that was, I was just generally overconfident, I suppose. But I think the good thing about a dual founder kind of setup is you have that other person to balance you a bit and to bounce off, well, a couple of things. I think generally if you've got different skill sets, which we do, that's kind of a tick, because then you've got more capability across to being good at things rather than relying on one. But also it is tough and it is hard, and you can't let that, I suppose, doubt whenever it happens filter into the broader business, because if you start crumbling, and by the way, it doesn't mean you can't show vulnerability. I'm a big believer that strong leaders can show vulnerability, but you can't show vulnerability all the time, and you got to balance. All of these things have got balance, right? So we were then able to use each other to pick ourselves up or to get a bit of confidence back or whatever it might be. And I think that was a really important part of the mix in the early years. And you're right, like even up until the moment of going public in 2014, like even up until then, like there were many moments where we could have died, like as a business. We had near-death experiences all the way along the journey. But we were able to, navigate all those and make sure we didn't fall over and whatever else. So getting back to your question, I'm not sure if I've answered this properly, but like right at the very start, like you have these moments where you might want to give up. But I think the balance, having that co-founder that you can work with. But then when you talk about the business, I think it's important that you have a great team around you, and you have, we're lucky in many ways with our culture, right? Our culture ended up being like, it's still something that people talk about today. When I catch up with ex-Aconexes, they talk about, oh man, that, like, they don't say, oh, the culture. They just talk about it being such a great place to work, because everyone was fully invested, fully bought in, fully believing. Like we talked about bleeding orange, right? Like people bleed orange. I've even got orange socks on. And that, it wasn't that we kind of sat down one day and said, hey, what do we want our culture to be? We were lucky enough that we hired a bunch of people in the early years that were just really committed, smart, driven, curious, all the good things that you want, right? And we ended up with this really vibrant place to work where we were constantly pushing to get better, and but you could always question someone and say, why do we do it that way? And it was always about getting better. But we had fun along the way. And so we sat down one day and said, like, man, what is it about this that we really love? And so we, wrote down the values that we think we have as an organization, because ultimately the values of the organization are just a reflection of the values of the team that work there, right? Like that's what it is. And then since we were then very conscious of it, we were like, okay, it is what it is. We can lose it if we don't focus on it. It'll just get diluted and end up like fading away. And once it's gone, it's gone. Or we can focus on it and we can, maintain it and strengthen it. So for example, when we hired with our values in mind. And when we had tough decisions to make, we kind of would refer back to them as kind of like guiding principles. And it kind of helped you navigate things. It also helped you hire. And we ended up with this organization where people they gave a shit. That's what we often say. Like people cared. They cared about the customer. They cared about each other. And it just ended up with this, this thing that kind of was beyond all of us.
Yeah, I feel like everyone that I've spoken to that worked at Aconex still speaks about it to this day of going, it's one of, if not the best place that I've ever worked at, which kind of really sounds...
That gives me so much joy. Like it's crazy.
Yeah. So many parts of this that I want to discuss, but maybe just kind of going back to you mentioning having, being able to kind of balance that vulnerability and it being important to be vulnerable. But I think for a lot of founders, it can be really difficult to navigate what the right balance is, both in terms of being able to do that with your team, being able to do that with your investors and with your co-founder as well. And there's probably different levels across the board with each of them. Yeah. Do you have an example of like what are things that maybe might feel uncomfortable, might be worth sharing, and what are like situations where actually you need to be a little bit more conscious of?
Showing vulnerability, I think that what it comes back to is it authentic? And so authenticity is kind of at the root of a lot of this stuff. And if you're being genuine and real and your reaction therefore is a bit raw and a bit vulnerable, if it's done from the right place with then I think people connect with that, and that in many ways it kind of can lift their opinion of you, not diminish it, right? Because a lot of people are scared to show emotion or scared to show vulnerability because they think it shows weakness. But if you were being vulnerable all the time and you were just down all the time or negative all the time, like that's clearly not a great place to be. But I just think, I've got no poker face. Like I'm known to have no poker face, and that's in some ways it's have you heard, I think even Simon Sinek talks about this, right? He talks about how something that is your weakness can also be your superpower. It's kind of like the flip side of it. And for me, that no filter rawness is part of that, right? So I'm known to be blunt and very direct and, lacking a bit of tact sometimes, right? Like this directness can grind occasionally, right? And that's a weakness of mine. I know about it. I've worked on it over the years, and it's not as bad as it used to be, but it's still there, right? It's still part of who I am. But then the flip side of that is people know what they get with me. Like there's this kind of, like I've got no poker face, kind of what they know that it's coming from an authentic place. So I think that makes people trust me and kind of want to come on the journey a little bit, right? So that's the superpower flip of the downside of being direct and blunt. And I've just got to work on the second bit more than the first bit.
Yeah, I feel like so much of like the company culture and DNA is essentially the founder's DNA and what they're like.
Yeah. Yes, but I think it's more than just us. Yeah, okay. I truly believe that the DNA that we ended up with was a combination of Leigh and me and a bunch of the early people that work there. I think that, we looked back after maybe a year of having employees and went, man, this is pretty amazing. What is it? And it was clear that there were bits that were coming from other people. Some of the customer obsession, came, I was obsessed about it, but then we had this lady who came along, Corinne Wines, who joined very early as one of our earliest support people, and she just cared and she just put everything into it, and she was great, right? So I think that's an example where our DNA definitely was influenced by her personality and her drive and her, no nonsense attitude, like that kind of, she fitted in really well. And by the way, going back to values, when you hire for values, it's the mistake here is if you think you're hiring for people that look like you. That's not what you should be. You can actually have people that have different personality types, but they still embody the same values. Yeah. So don't hire the same personalities, because then you end up with yes men and all sorts of bad things. So, yeah.
Just on that, I think you kind of spoke about, obviously how much both you and Leigh, but also the early employees kind of shaped that. And I think a lot of that is kind of built in and, relatively easy when you've got 10, 20 people. Yeah. When you sort of go beyond that, and I believe Aconex had up to sort of 800 people.
About 1,000 at the end.
About 1,000 people at the end. How do you sort of think about taking the DNA of that and, expanding that out to 1,000 people?
Yeah. For one, we were conscious of it and we worked on it, right? So those two things. But it's true that once you go through about the 100-person mark, things change, right? And it's that known number where social circles, up below 100 people, kind of everyone quite intimately. Not like that. Like you just know everyone's name, and you just it's just quite naturally easy for people to do that. But once you go above 100, it's not quite that easy. And that's why social groups kind of tend to splinter above 100. But I think what you then have to do is you have to make sure that you've got people in the team that are also champions of this. You can't do it on your own as the champion of the culture. You have to have all these people that kind of live and breathe the same way. And I think that's when it's successful. And when the first overseas office we did was I went over and set up the office over in London, spent a couple of years there. But then the people that we hired there, Yuval's a guy he was with us right till the end. He was one of the first hires there, and he bleeds orange too, right? And so, having then, when I moved back to Melbourne, having someone like him there that was kind of like flying the flag, for want of a better word, or just, he then kind of owned that himself. And then when we set up other offices, we were just conscious that we had to have kind of it wasn't just a matter of hiring some people and plonking them in an office. It was like, how do we make the culture kind of pick up? And it was hard, by the way, when you had an office of one or two, because how do you get infected with that? So what we did in the right up until very late, we were kind of doing this induction process, right? So someone would get hired around the world, wherever they were, and they'd get flown to Melbourne for 2 weeks. And it was partly a onboarding process, which I think a lot of businesses don't put enough energy into onboarding people and giving them the tools to succeed. Like, here's how if you're a sales guy, here's how you sell, here's your objection handling, here's how how you present, here's how you demo, all that kind of stuff. Like, you don't just give someone a laptop and hope they do it, right? So you bring them on and you kind of give them the tools to succeed. But at the same time, when they come to Melbourne, they kind of get infected by the mothership, right? Like, so they ended up seeing and feeling what it felt like to be part of this. They go back to their office all kind of revved up because they've felt it. And then hopefully that makes that office kind of start to create. It doesn't have to be exactly the same culture, by the way, but it's just got to have the same kind of essence.
Yeah.
That was also something we spoke about on and off a lot, was should we be doing inductions? Because it was expensive to do, right? Like flying people into Melbourne, putting them up in a hotel, blah, blah, blah. It's probably 7 to 10 grand per person. And if you're hiring a lot of people, that's a lot of money to spend. And, it's easy to go, let's just stop doing inductions and do it remote or do it via, Zoom wasn't around then, I don't think. But we always came back to it's some of it's tangible and some of it's intangible. And the intangible stuff, like if we don't invest in that and it kind of goes away, we're in a worse place. So we invested in it, even though it was hard to justify on a bit of paper ROI. It was more like we believe in it.
How do you make some of those sort of decisions as well, where it's like tough to really measure financial ROI on that, but it's more of a culture and sort of long-term ROI?
Yeah, I mean, you don't have to have everything in number, but you have to be able to justify at least the rationale behind it, right? And even in marketing, right? Some things are easy to measure and some things are hard to measure. So, it doesn't mean that you don't do things that are hard to measure. But you've got to have a rationale and a justification behind it that you can articulate. Because, we had this question, what's accepted value, right? Which kind of put another way is be ready to explain why you do it a certain way. And if you can't explain why, then be ready to change. Yeah, that was really kind of caked into everything we did, was explain why.
We're going to take a very quick break from this podcast to talk about one of our partners, Vanta. So if you're building a SaaS business and want to quickly unlock growth and build customer trust, one way to do this is by achieving compliance with SOC 2, ISO 27001, CPS 234, Essential 8, or other in-demand compliance frameworks. However, this process is often time-intensive and very costly. Vanta automates up to 90% of compliance, making you audit-ready quickly and saving you up to 85% of associated costs. And not only that, Vanta scales with your business. With a market-leading trust management platform to help you continuously monitor compliance, unify risk management, and streamline security reviews. You can join over 8,000 global companies like Atlassian, Dovetail, and Indebted that use Vanta to build trust and prove security in real time. As a listener of the show, you can get up to $1,000 US off Vanta when you head over to vanta.com/demo. All right, let's get back to the episode. Again, sort of going back to something you mentioned a little bit earlier, which was the near-death experiences that you've had. Again, from the outside looking in, Aconex, what an incredibly easy journey, over
overnight, over 10-year overnight success, right?
Yeah, 1,000 people, $1.6 billion exit, great. Just must have been such a smooth ride, but it is, never the case. And obviously, Leigh's mentioned a couple of sort of situations around things as well. But I know when you and I spoke initially, you kind of mentioned there was a particular period around 2006, 2007 that got particularly really dicey for you guys.
It was really dicey on a number of fronts. It was dicey for the business, but it also impacted my health big time. I got fat. I got stressed. My cholesterol went up. All these things happen on the back of, the stress that came from that moment, and me, not exercising enough, drinking a few too many beers to kind of cope with it, all that kind of, anyway. But it was in the back of, and this is a lesson that I talk to founders about, is we were coming along and we had shareholders involved, and there was a kind of, pressure is not the right word, but there were some questions from shareholders saying, hey, why don't you guys get some debt rather than raise another equity round, which is dilutive, get some debt. The problem with debt when you're a early stage business and you're using it for growth capital, debt's fine if you've got a working capital requirement. Like if you've got, if you happen to have an IoT element to your solution and you need to buy in 1,000 units of a widget to sell to customers, and it's going to, you just have to pay for it to get money back in a month. That's a really short-term working capital. Debt's fine for that. But if you're using it to hire salespeople or engineers to build something that's going to have a 2, 3, 4 year payback, that's really dangerous, because you go into debt, and debt always has covenants of some sort. You're going to have either a interest coverage covenant or whatever it might be, or even things change in a macro sense. And so you might have an annual review, and all of a sudden the annual review, the bank or whoever it is decides to not, say, well, we're not going to renew the loan this year, because they have renewal cycles. You can end up in a really, really quick time in a situation where you're insolvent, right? Because if if things change and you can't pay the money back and you have to pay the money back and you've got like a month to pay it back or 2 weeks to pay it back, and you can't go off and do a round in that kind of amount of time. And so, yeah, you could have just in a matter of a month or two go from being fine to being insolvent, and you've lost everything, right? Like, and that's ultimately, that's the most dilution you can have. Yeah. So it's just don't do debt for growth capital in early years. Do it when you're really mature down the track, and just don't be scared of dilution. I see a lot of founders worried about dilution, and just don't be like, don't do stupid stuff when you do raises, right? But if you go out there and you raise money at an okay valuation and you raise a little bit more than you think you need, that's actually a good thing, right? Like, it means you've got a little bit of more in the bank to in case things don't go right. And, Leigh and I always had the idea or the view that we'd rather have a small slice of really big pie than to have a big slice of something smaller. If nothing else, like building a big pie is way more fun, right? Like, it's being a high growth, bigger, as growing bigger and bigger. Like, it's just, there's something intoxicating about that where it's not necessarily the number, but it means you're succeeding. Like, if you've got really high growth, revenue, it means customers love you. Because, this idea, like we talked about it in the product team a lot, was the measure of kind of what's the success of a product is do people like it and do people use it? Because if they like it and they use it, then revenue will come, right? Like, the revenue will kind of be the output of that. You shouldn't go, I have to get revenue first, because if you've got revenue and customers don't like it, then they're going to churn and they're going to, So you got to start the other way around.
Yeah. What you kind of mentioned about taking additional money on, I feel like everything just takes a lot longer and is more expensive than you think it's going to be. And it was something Leigh and I spoke about as well, of just like fundraising for founders in general, where, as a syndicate, we kind of invest at the pre-seed stage. We meet with a lot of founders that are raising 400-500K.
Yeah, it's not a lot, is it?
It's just doing themselves a disservice, like they're not buying themselves the runway that they need. And, I think trying to raise 400-500K is just as difficult as raising additional
4 or 5, yeah. 4 or 5 million.
Yeah. And so, it's just, you're kind of like shooting yourself in the foot. And yeah, I think like the right investors will kind of push you to really think about what you sort of need around those sort of things as well.
Yeah. Like the, you see it less now, but like around 2021, 22, there were lots of people who were like, I'll raise and I'll just do another round in 12 months. It's like crazy, right? Like, and Leigh talks about this idea of porpoising, right? This idea that you raise enough to allow you to go into burn territory, but you then have to be within cooee of being able to breathe again if you need to come up for air, if you like. It's if you're deep underwater expecting the next air bubble to be delivered to you, like while you're under, like, and it doesn't happen, then you're gone, right? So, and it does sometimes mean that you have to like make significant cuts to get back to air, because you don't want to be coming up to cash flow positive all the time necessarily, but you've got to be within breathing distance before you do each round. Otherwise, macro stuff changes, and people saw that like over the last few years where, money was so easy to come by for a while, and then all of a sudden stuff changed, and businesses were either doing down rounds or they weren't raising and they were going out of business, and it was nasty. Another thing that you saw is in that kind of heady days where people were getting valuations that were crazy and it's kind of not the founder's fault, because it's been given to them by the VCs, right? But the VCs were giving them these stupid valuations, and they were going, of course I'll take that big valuation, but it can come back to bite, right? Like, if macro stuff changes, which it did, and multiples come down, then you've got to grow into this valuation, and you either do a down round or a flat round, which is just not good for anyone. It's not good for you. It's not good for past shareholders. It kind of creates a negative vibe around the business. It's not necessary. So you're better off to take baby steps.
Yeah. I don't know if you've watched Silicon Valley,
the
TV show, but there's that whole thing of this guy's like, I've worked through every possible solution. There's no way we could have worked it out. But like, unless we've taken a little bit less money and had a more healthy evaluation, been able to grow into it.
It's a great show, but I watch it and I laugh and I cringe. Like, it's just one of those.
100%. Yeah. Speaking of analogies as well, I spoke to Ben Leach, who is the co-founder and CEO of Hammertech, who says they kind of work quite closely with you as an advisor. And he mentioned, you've kind of helped him in a lot of different ways. But one of the things that he sort of referenced was this analogy that you have around like tools for the job, specifically around, do you have the right, not just capital, but people skills that you need to sort of go through the different stages of a company. And, you know, I think that's something that often is hard, both from a emotional perspective, but also kind of like if you haven't gone through that experience before, it's tough to know what are those kind of like step changes and those sort of things as well. Is there any insight you can kind of share in terms of the journey from an Aconex perspective, or even just what you've seen with other companies in terms of things that founders get wrong about that, or just decisions that they need to sort of consider or make?
I mean, founders will get things wrong. Like that's the whole kind of premise. If you think you're not going to make mistakes, but it's kind of how you navigate them that kind of matters. One thing that is way more around now, which is, I think, great. The ecosystem around startups from both a funding and a support point of view is like way stronger. So when Leigh and I started, there was like one VC in Australia. That was it. And they were, and we ended up doing, friends and family raises because this wasn't a VC ecosystem. And there wasn't really an ecosystem of people that we could kind of, who had been in our shoes, because people hadn't been in our shoes. Whereas then that's what I with Ben, great guy, that we catch up and we talk about. It's interesting. We catch up for lunch and we'll talk about different topics, and I reckon 10 or 20% of the time it's actually business related. So let's talk about go to market. Let's talk about product strategy. Like that's 10% of the time, maybe 20, and then the other 80 is just like being a psych session, right? Like talking about life and challenges, and because it kind of impacts your life as well, right? Like it's hard on your partner, it's hard on your kids because you don't see them as much as you would if you weren't working like a crazy person. And so we have these kind of sessions where he'll kind of talk about what's going on in his life, and often it'll be like, gee, this is hard, and I'll go, yeah, it's bloody hard. And I think just knowing that someone else has been in your shoes and they've had it tough too, that can sometimes just be enough to go, okay, I'm not the only one. I'm not alone here. Other people screw up. Other people find it tough. And it gives them enough kind of energy to kind of go back and a little bit like what we did at that up in Sydney when we kind of like reset ourselves. And you kind of often go back in with like your energy recharge a little bit. So that's something that I think is really, really great. But as a individual, maybe this is where you're going, is you have to learn and evolve, right? Like you can't, I look back on myself and I've still got lots of failings and things that I need to work on, but I'm quite a different person with different skills than I was 25 years ago. You'd hope so too, right? And that comes down to, I think one of the things that good founders have is this kind of curiosity angle to them, which is like why and can I do it better and all that kind of stuff. But if you're curious, then also you're about self-improvement. And so however that comes, whether, and you don't have to do it a certain way, right? Like some people read heaps and heaps of books, and that's a really valid way of self-improvement. Other people do courses. Some people engage with individuals and kind of have mentory kind of relationships. They're all really valid ways of improving, but the most fundamental thing is you've got a mindset of self-improvement. And if you got that, then you're okay.
Yeah. Speaking of the challenging parts of this, something Leigh mentioned was you guys weren't really looking to sell.
No.
At that point, you were not necessarily forced into it, but it was like too good of an offer to sort of walk away from, wanting to take care of your shareholders. And it kind of got to a point where I think you had rejected multiple offers that sort of came in, but got to a point where you had to say yes. Yeah,
it's the downside of being listed, right? Because when you're listed, you've got shareholders that you have to respond to, and you've got there's listing rules about what information you give them and all that kind of stuff, right? And also, by definition, you've diluted down and you're not majority shareholders anymore, right? So you don't have the casting vote. So a bit of background here too. So we were publicly listed, but we're also at the moment when we had the incoming acquisition offers, we were, I think, the most shorted stock on the Australian ASX, on the stock market. And that's actually one of the downsides, I think, of so short selling, if people who aren't aware of how it works, is, normally people who want your stock, they'll buy your stock because they want it to go up, and that's how they make their money, right? Whereas short sellers, they target stocks that they think are overvalued, and then they borrow stock that they haven't got, and then they sell it at what they think's a high price, and then hope the price goes down, and then they buy it and they give it back to the person they borrowed from, and they make their money out of the drop, right? So that's how that works. But also, short selling's unregulated, so short sellers can take a position, and then no regulation about how what they have information they have to give or how that works, right? So they can spread rumors and do all sorts of things to drive your price down, and that kind of happened to us. We listed quite modestly. We ended up, our price went up quite strongly on performance, but then we ended up being short sold, and our price went from about $8 down to $3. Got really kind of suppressed in our view. But then that's when other people who were maybe looking at buying us were going, oh man, they're really good value now. Like they're down, more than half what they were. Let's go in now and put in an offer because, relative to where they are now, that's a really good. So we had those inbound offers coming in, and we weren't looking, we weren't doing a process, and we had two companies doing inbound to us, and we kind of said no to a couple of the offers, but we of course had to get advice from someone about what do we do here. And so they kind of went off and did a whole bunch of analysis and came back and said, you've got this get stuffed zone where you can actually say get stuffed pretty comfortably. There's a grey zone where it's like a bit arguable one way or the other, and then there's this zone where you have to engage, where it's incumbent on you as directors of the business you should go to shareholders and say, hey, what do you think about this? They might say no to it, but you've at least got to give them the choice to have a look at it. So they kept on upping their offer until they got into the go zone, and we're like, okay, here we go. So we went out to the shareholders. What was great though about this is we were still being short sold, right? So, and I can't remember what our exact price was, but we were at like $5 or something at the time, or $4.50. And the offer price was $7.80 per share. And so the day that it was announced, because it was all hush-hush, the day that it was announced, all the short sellers got absolutely toasted, right? Because they're hoping the price goes down. The price just rocketed up close to and so it was actually quite good karma for those guys that they got absolutely roasted. There was one of the, on the back page of the Fin Review that was talking about the transaction, and, those little call out things, everything's a bit bolder and bigger and it was this thing saying you could smell the burning flesh coming from the keyboards of the short sellers. It was quite funny. And so that happened, and we went out to shareholders, and there was a process to go through. We had to go through Foreign Investment Review Board and a bunch of other things, but ultimately it got approved. And lessons that I learned out of that too, by the way, running a company is the best MBA that money can't buy. You learn stuff that, so one of them is when you go out to shareholders, we had a bunch of institutional investors who had big positions. And of course, when, an offer comes in, which is, financially good for them compared to the current price, they're kind of like, yep, okay, I'm prepared to exit at that. But say the price went up to $7.60, I think. They were actually quite comfortable to exit at the $7.60 that was market price and not hang around the 3 months to get the final 20 cents. But there's actually a bunch of funds out there that their whole business model is to come in for companies that have just had a takeover offer, and the price, there's a kind of a arbitrage there between the current price and what'll happen. And they think that it's actually really a solid bet that they're going to get that 20 cents. So all they've got to do is buy a whole bunch of shares, fund that purchase, and then they get the 20 cents in 3 months, and that's how they make their money. The downside of that, though, is you end up with a shareholder register full of these people who are absolutely hell-bent on making the transaction go through, because that's how they make their money, right? So by the time you get to the vote 3 months down the track, it's so locked in as a yes that there's no chance of it going the other way. Yeah, but that was a lesson.
Yeah. I mean, I remember speaking to Leigh about this and him talking about, and you mentioned this as well about you kind of hit that zone and it's the right thing to do of taking that out there. But what does that look like on a personal level of a company that you've spent a huge chunk of your life building and kind of going through that journey with, to not ultimately sort of decide the outcome and suddenly have to, the dynamic of that changing? What does that feel like for you guys?
Well, it was, I remember that day quite vividly, the day it became public, right? So two things happened. I was waiting, it was going to be announced to the ASX early in the morning. So I got into work early, as I normally did, and I was went next door to get a coffee, and I was just waiting for my phone to ping with the announcement to be live. And I remember this is now Flinders Street office, and I remember walking back into the foyer and people still weren't there, and I was walking through there, and then the ping came up and it was like, announcements live. And I remember just breaking down, just crying in the middle of the foyer with a coffee in my hand, because the feeling of the emotions that wash over you are manyfold, but they're strong, right? And then we had an all hands with the executive not long after, maybe an hour later. And I remember the message to them was, I feel kind of a bit broken, but I'm super proud at the same time. And that, I think that was something that kind of everyone kind of felt like it was like it felt like a bit of a letdown's not the right word, but it felt sad because it felt like it was the end of something. But also we were all just super proud that we had built it. We were part of it. We contributed. This duality of feeling that you had was really palpable. But that day was, talk about emotional. That was a big day.
And I know there was another pretty emotional day for you as well when you, I think it was about 2.5 years later when you sort of actually left. And, after spending such a long time period with the company as well, it's difficult when your last day is over Zoom.
Yeah.
Zoom drinks.
It was so tough. Because background to that, so I stayed for 2.5 years. I had to stay for two. I couldn't give notice in the first 12 months. Not that I was going, I wanted to stay for a period of time to make sure the transition happened well, that the customers looked after, staff were looked after, that the product was in a good place inside the ecosystem of Oracle and all that kind of stuff. I didn't want to just head out the door waving, saying, see you guys. So I stayed around, but I had to give a year's notice when I was leaving. And so I gave notice in July of 2019, thinking that in July of 2020, that'd be a great time to leave. And that last month would be a month of long lunches and karaoke and a final party on the final day, walking out and see you fellas. Finally, that would have been a good, but then of course COVID happened. And I remember when we got sent home from work to work at home, it was March, and I remember going home, I wonder if we'll be back before my farewell in July. And of course, it didn't. And then my final day was a Zoom drinks, which was lovely, but you're sitting there with, all these faces that are, postage stamp sized heads and on there, and then there's a point where you kind of hang up on the call and you're sitting there at this desk that has been your desk for the past however many months, sitting in your jocks I think, and just going, God, this is sad. It was a really there was a letdown in terms of how I imagined it the end to be, but still, that's nothing in context of all the memories I've got about how it worked and the people I worked with. And because people often say, do you miss it? And I say, I miss the people. I miss everyone I worked with, even the people that frustrated me. I miss them, right? Because we all did it coming from a place, the right place. And if they weren't doing it from the right place, then they didn't fit. Yeah. If they were just being difficult for the sake of being difficult, that wasn't really the vibe. But if you were doing it because you cared or you wanted to improve or you were challenging, that's encouraged.
Again, I mentioned this to Leigh when we spoke, but I remember with my first company in particular, and I think every company, and also speaking to a lot of founders, so much of your identity gets tied to your business, and especially when you've been doing it for almost 20 years, I imagine that that is a part of you, your life, your friends, your day-to-day, all of those sort of things have just become such a big part of that. What did that sort of look like for you once, I guess there were two periods. So one is when the acquisition happened and then when you sort of officially left. Yeah.
I mean, it's true that your identity is tied up, but I didn't find that transition too difficult, I don't think. Because when I was at Oracle, I was looking after product for the construction engineering GBU. So it was kind of, I kind of had to have a view that was beyond Aconex, even though I was very much focused on making sure that it was bedded down well. But my identity was beyond that. And then when I left, I'd kind of made peace with, I need to let someone else run this. This is their baby now. I've done as much as I can to make sure it's in a good place. And so I was fine for that to, the analogy, it kind of broke my heart a little bit, but it was the analogy, it's what I imagine it's going to be like when my daughter, I've got two kids, but my daughter's the older one. So imagine when she leaves home for the first time or goes off to uni, and I'm going to be a bit heartbroken because she's leaving and she's not in my life day to day anymore, but I'll be super proud because she's off conquering the world and doing a thing. And that's kind of how I felt, but I was fine for it to be, that's a chapter that's now gone. But now I use what I've learnt to both invest in great entrepreneurs, find these great entrepreneurs, back them with both with money and also with help, like Ben, who, I help out Ben out and hopefully help him navigate that journey. And the interesting thing is you're not there just it's not a mechanical transaction, right? Like Ben and I have become friends, like really good friends. And it's on the back of when you share this kind of intimate stuff, you can't not be friends, I think.
Yeah. I imagine, especially with the success that you've had with Aconex, you get a lot of people that sort of reach out. And I feel like a lot of those, investing's a little bit different, but I think especially when it comes to those sort of advisor, mentor sort of relationships where you're kind of like doing it because you love spending time with them and there's that kind of connection. I think it's very difficult to force those things, but I guess what are things that you look for that get you excited in being and spending more time with someone like Ben, for example?
So probably I look for like curiosity, bit of humility. The people who, like, I often talk about this, the contradiction of an entrepreneur, right? Like and the best entrepreneurs have this contradiction built into them, but they balance it, right? So things like they are super confident, they know what to do, but they also have to listen. You have to listen to customers as well. So you've got to have both of those sides to it. You've got to be, you've got to be very decisive, but you've also got to be vulnerable from time to time and acknowledge when you don't know. But so all of these things are opposite sides of the coin, and on the surface don't coexist. But I think great founders actually find the balance between them. They kind of modulate between those two states. And so I look for people who are smart. They've got to be clever. They've got to be curious. They've got to be humble. And if they've got and you try and pick all that. It's hard to pick all that stuff too, but that kind of resiliency piece has got to be in there. And if they've got that, then they'll be able to navigate. They'll be able to learn. They'll be able to step up. They'll be able to navigate and pivot. They'll be able to do all the things that you need to do to make a business succeed. So yeah, I look for all of that. And it's something interesting. Something that I've found more and more as I've gone along. When you start a business, when you're kind of an entrepreneur or founder, in the early days at least, you're doing, like you're hands-on, you're doing everything. It's a very much do. And you kind of, as it grows, you kind of need to have a team around you. You need to delegate and all that kind of stuff. But now the thing that I'm doing now is very much not hands-on, right? Like I'm not running the business. I'm kind of coming in and helping and advising. And in many ways, it's kind of cheerleading rather than being on the court, yeah? And I find that cheerleading role really satisfying. I didn't think I would necessarily. I was a bit unsure, like, will I find this satisfying enough for me? But yeah, I really enjoy it. But it comes down to if I do it with people who I really respect and admire the way they're going about it, then I don't see it as a one-way transaction, by the way. I see it very like, with Ben, and I'm helping out another guy, Mike Christidis, who's in the music industry. He's not in software at all. But he and I have this relationship where he says he learns from me, but I learn a bunch from him too. And it comes from self-respect, curiosity, humility, all that kind of stuff. And I get a buzz out of it. I really enjoy doing it.
Sender is the OG startup accounting firm in Australia, catering to all stages of your business life. If you're busy running a business, you don't always have the time to do your own books and forecasts, and instead you can fully outsource your finance function so that you have the time and resources back to do what you do best, which is growing your business. They have a dedicated focus on founders, funds, and startups, and have an experienced team that can help you with everything from managing your tax to balancing your books to even helping with your exit strategy. I trust and use them with all of my businesses and can't recommend them highly enough. To find out more or to speak to Gareth and the team, head over to sender.com. All right, let's get back to this episode. Obviously, I want to talk about Glitch, which you just launched recently, which is last week. Very exciting news. So, new $50 million fund. I love the philosophy behind it as well, which is very in line with why I started this podcast 8.5 years ago, which was, I felt like a lot of people at that time were starting to give advice to founders, which based off my own experience was advice that I didn't necessarily agree with. But, these were coming from people that had worked at a Big Four accounting firm, had never run a company before, and, have their own perspective on things. But early stage startups require very different understanding. And there's something different about people who, like you were mentioning earlier, like understand the journey, understand the challenges and all those sort of things. And so that's what this show became. How do we bring on people that have been there and done it before, knowing that not everything's applicable, but at least you're hearing from someone who's done it before and can talk about the pros and cons of it versus theoretically what they would do. Yeah. And very similarly with Glitch, very sort of founder-focused fund as well. Do you want to share a little bit about what you guys are doing?
Yeah, very founder-focused. And I suppose a bit of like things get there through a journey. And so I'd been for the last 5-6 years since leaving Oracle had been investing full time. That was kind of my day job, for want of a better word, through Gravel Road, which is my I suppose it's a venture fund, but it's kind of my family office. So, that was what I was doing and doing it, liking it, doing quite well. Leigh was doing his thing through Samuel and he was investing directly as well. We both had people working for us to help us, do all the analysis and, IC stuff around deciding what to invest in. So we didn't get any, I suppose, critical mass or scale efficiencies out of each other because we were doing our own thing. And then we had people like Sam Kroonenberg who exited a cloud guru, and he was like, oh, what do I do now? I don't want to be totally passive on my investments, but do I have to go up and set my own fund up? Do I have to employ people? Like, what do I do? Jeff Tarrant he exited Pay Apps. He was having similar thoughts, and we're like this. It makes sense that we bring together a bunch of people who have similar drivers around what to invest in and how to think about it and all the rest, but also want to bring kind of their experience to these founders. So not just, it's more than money, right? It's a fund by founders for founders. And then also then beyond that, we got all the LPs that invested in the fund who aren't kind of on the IC or anything, but they're putting their money in. There a whole bunch of them. We've got 50 operators and founders that have invested in the fund, and they're also part of this community or this bench, if you like, that the founders that we invest in, they can, rather than, when it was just me, for example, and I put a check in, you had access to me, but, that's just one person with one set of experience and blah, 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 right? So you've got this bench of people that you can draw on depending on the industry that you're in. Like, it's just, a much broader, we've got the guys from Mr. Yum, for example, guys from Leonardo AI. There's a whole bunch of people who've got really diverse experiences, but have been through the same journey. And I think what founders want and need is, yeah, they want money, but they also want to be able to talk to people who have actually been in their shoes, who have experienced the ups, the downs, the joys, the heartaches, all that stuff, and help them. And because as you get bigger and bigger, as you grow, there are increasingly fewer people that you can actually speak to who have actually been in your shoes at that stage of your business. So the idea is that we have this great bunch of people who can help these guys navigate that journey, because you go through, there's kind of these step changes you go through, right? Like getting to 3 million ARR is hard, yeah, but there's a lot of companies that get there, but then they kind of flatline, so getting from 3 to 10 is another kind of skill set almost, because to get to 3, you can do it based on the kind of sheer will of the founders. Like you can just get there, founder sales, all the rest. You get to 2 or 3 mil, but to get to 10 mil, you need to have built a repeatable sales engine, for example, and you need to be able to bring on people that can sell beyond the founders. And that's a measure of getting to 10, which a lot of companies fail at. And then getting from 10 to, it's kind of every tripling. And then you're getting from 10 to 30, it's another level of organizational maturity again. And then getting from 30 to 100, like when you get to 100, that's a serious business you got there, right? Like that's, depending on how fast you're growing, you kind of, at that point, you're kind of approaching $1 billion in market cap and you're pretty serious at that point, right? So yeah, the idea behind Glitch, we're a founders fund. We invest alongside other VCs. We generally won't lead rounds, but we'll come along. Our target is software companies, B2B software that have ARR between 1 and 10 million. We do go outside that. That's kind of guidelines. We do go smaller than that sometimes, and we do go above that sometimes. And that's kind of the stage we invest in, because we want to invest where they've got a bit of traction, but we can then really help them get to that next point.
And as you mentioned, I think a large part of that is understanding the journey and understanding what's required. Part of that process, as you mentioned earlier, is 10 to 20% of that is actual technical go-to-market, all those sort of things. And there's a lot of great content available online. Yeah,
but, there's heaps of books you can read.
Yeah. The other part of that is just really kind of understanding the shoes, emotionally. And, I think you kind of mentioned this before about, 80% of the role is actually being a psychologist to these founders. Yeah. What are some of those common themes that you see coming up over and over again, whether that's through portfolio companies or founders that you're advising in on that psychology part that they need?
Well, I don't think it's necessarily any one thing, and it depends on the individual too, right? But I think things that you can really help with are helping when things are tough or they've got self-doubt, helping them navigate that. Not navigate's the wrong word. It's just they will naturally get their way through. They just need someone to offload to often so that they can just get this off their chest. They can, and then get, I suppose, the validation that they're not the only one. Other people have been through it. They're not crazy. They're not crap. Like, they just need to kind of talk that through, and then they come through the other end, go, okay, and they're locked in for another effort, if you like. There's often questions about, leadership and team and all the rest. And that's a one to kind of just talk through, because every situation's different. Every relationship between people is different. And yeah, so I wouldn't say that there's no playbook about here's what I would say in that situation, but you just want to talk through leadership, resilience and kind of problems. Capital raising is one, like where, they think about, like, dilution is probably a topic that comes up, because people are like often thinking about, well, not everyone, but some people are thinking about, I don't want to dilute too much, but I try and have conversations where that shouldn't be, think about it, but don't let that be the driver of the round, or don't extend the round by another 2 months just to kind of save a little bit of dilution. Like, you're way better off to get your round done quickly than you are to squabble about valuation, right? So, because rounds can take 6 months on average, I'd say. But if you can get it done in 2 months, that means you've got 4 months in your pocket that you can be back working on the business rather than talking to shareholders, which actually adds no value, right? It's actually working on the business, working with your team, talking to customers. That's where the value comes from. So get back in the business as soon as you can.
Yeah. And you said it's never kind of like any one thing. And, part of this is like that sort of bigger picture. One of the things, so the two things that kind of came out from everyone that I spoke to was the incredible people skills and the culture that you built at Aconex. But the second part was how important family is for you as well. Yes. And, often I haven't told you this, but there's a new business that I launched recently called the Como Club, which is all about, called the Human Accelerator, which is all about how do we help a lot of people that are very driven, ambitious, motivated, which are all great traits, but very easy to let work overtake everything and have a lot of very important plates that we sort of tend to overlook. Yeah. And we get so diligent with what are the metrics and things that we need to track for our business, because we know if we don't put in energy and focus into that, it's not magically going to happen. But in other parts of our life, we're like, it'll kind of take care of itself and take a very, very different approach. But, one of the things that Andrew mentioned was he recalled a story about how I think you guys were staying late back at work, went for a beer, and then he's like, I need to get home. And you're like, me too. I need to bike and go to the grocery store and pick up some stuff for dinner, because you're making dinner for your family and for some people coming over as well. And he's just like, it's like, I was wrecked and I was just happy to be home. Yeah. But, and I know that before we kind of turned on the mics, you were talking about the family trips that you guys have as well.
Yeah, can't wait.
Yeah. How do you sort of think about that for yourself? If, obviously you were very ambitious and competitive and motivated with what you were trying to do with Aconex and obviously all the success that you had. How do you sort of juggle that with other very important things in your life as well?
Well, I think when it matters to you, right, you make it work. And so, I would just kind of compartmentalize it. I would also, after that period where I kind of got fat and all the rest, you got to look after your body, because your body and your mind are all kind of like, if you don't look after that first, then everything else falls apart. So I was, I'd kind of have ride to work, because ride to work allowed me to kind of thinking time for one, but it was also free exercise. And then you go to the gym before, so it wouldn't get bumped. And then you'd kind of be, when you're in work, you're in work. But then I would make sure that, like, I would cook at home for my family pretty much every night, right? And it's partly because I enjoy cooking. I really do. I actually find it a stress reliever for me, not a chore. It's a way of decompressing after a day. But also I love, and this kind of comes back to why I love construction, is I love putting a meal on the table in front of people and then they appreciate it and enjoy it, right? Like this, A, I did it, and B, you like it. Like, yeah, I'm kind of, it's not one of my, I'm a bit of a people pleaser, right? So that's again a flaw and a superpower kind of tied up together. Yeah, so I just made sure that I did that as whenever I could, I would do it, just for my own sanity, but also, I don't know, it kind of creates a sense of home, a sense of love, a sense of, I've got a great relationship with my kids but it doesn't happen, like if I was off absent the whole time, then I wouldn't have that, right? So, you just got to be conscious of it and work at it.
Yeah, I think that there's this narrative that kind of often gets pushed, which is, to be successful, you have to hustle all the time and work really hard, which you have to do through periods, but you have to give up a lot of other things in your life, or you take care of yourself and just focus on well-being and, hard work, and ambition is a dirty word. But I think for a lot of us, the answer is actually somewhere in the middle for it, which is, what we do for work is such an important part of leading a fulfilling life, but doesn't necessarily mean you can't have a great relationship with your kids and balance all of those sort of things as well. But it can be hard. And there can be sort of periods as well, which I think people sort of
you get the balance wrong, yeah.
Correct. Like you said, there was a period where, it was difficult for you as well, where you weren't sort of taking care of your health, but that doesn't mean that needs to last forever. There's just like peaks and troughs with some of those sort of things. Again, for founders that you work with or anyone that's kind of listening, any advice in terms of how to think about structuring that for themselves or reframing that?
Well, I mean, it's maybe a bit trite just to say, everyone's different, but everyone is different, right? Like for me, I compartmentalizing things and doing things that I knew were important but could easily get bumped, like doing gym. Like a lot of people try and do gym after work or at lunch, for example, but they would always get bumped by something else, right? But if you do it like at 6 a.m, then it's locked and loaded and it's all done, yeah? What it does mean, though, is you've got to have a personality type where getting up early when you don't want to and doing that is okay, and luckily that worked for me. But some people would find that impossible to do because they're night owls and they're not morning owls, right? So I think you've got to pick something that you can stick at. Like there's no use doing something that is so hard for you, given your personality type, that you just kind of won't be able to do it long term or even medium term. And things that kind of have dual purpose, like riding to work, for example. Free exercise. I didn't have to be on the stress relief of not being on public transport or driving was actually quite strong, right? Because you're on a bike and you're kind of decompressing. But I actually find it was a bit of meditation space almost. Like different people meditate in different ways. Some people do traditional methods. Some people swim, for example. They find swimming. Some people run, yeah, and swimming and running and even bike riding to an extent, it's kind of like controlled breathing, yeah, because you've got to get into this rhythm of breathing. And when you start doing that, your mind starts to kind of clear a little bit. And I found that really helped me stay sane and kind of think about the things that mattered rather than being kind of worried about the thing that was just in front of you. Yeah.
I did hear that you used to ride to and from work every day, and that sometimes you did come in with huffing and puffing because you got very competitive and didn't want to let anyone be faster than you.
Well, it was so Andrew tells a story about how I wouldn't let people pass, which is not true, right? Like if they could pass me, they could pass me, right? But I would ride fast enough that I didn't want to be the slow guy. So yes, I would get to work pretty puffed. But then that's kind of the point, right? Like, yeah.
I love it. Rob, I could talk to you for hours, but maybe last thing that I want to finish on, which I know that you don't kind of talk a lot about in general, but, again, is something that kind of came up several times in speaking to people as well, but how like your kind of focus on philanthropy as well and giving in general. We'd just love to kind of hear a little bit of your perspective and think about that.
Yeah, so I think it comes in a couple of ways, right? So we've set up a foundation or a PAF, which is a kind of a structure that helps you give. But also outside that, I kind of give my time and energy to various kind of not-for-profits. So that's something that I give as well, as you can give time and money. But I think you get to a point, if you've been lucky enough and fortunate enough to kind of succeed, then I think I don't know, it feels like there's an obligation to give back. Not that I feel it's an obligation, but I think you should. And that's different for everyone, right? And we also in Australia are kind of pretty bad at talking about this and encouraging it. I'll give you an example. When I first set up my PAF, which we set up back in 2008, so quite a long way back, when we had like a little secondary buyout, when we had a raise and we got a little bit of money out, and I thought, I'll just put, a bit into this PAF to kind of kick it off. I called it the Gravel Road Foundation, right? Because I didn't want to call it the Robert Phillpot Foundation because I thought that would be super not humble, right? But so I was like, at that point, I was like, everything's going to be anonymous. I'm not going to talk about it. Like, I'll just give, but I won't. Like, I'll be under the radar. And my view on that has changed a little bit. Not that I want to go out and big note myself. That's not the point. But I think we as a society need to normalize giving and philanthropy more than we currently do. If you go to America, it's so normalized and like the expectation is strong. And so people have their philanthropic giving is fantastic. So now I often talk to people about why I do it and the joy I get out of it, because it's not like you get something back, right? It's not like you're just giving money and that's one way. Like you feel joy, like real joy from helping these people out when you see the outcomes that come out of it. So talk about why I do it, encourage people to do it and how to think about it. And even things like, for example, like how much, and I think that's a really personal question, but even the conversation about it really, the difference changes a lot as the wealth that you have changes. So I'll give you some extreme examples. So if you've got $1 million, that's not a truckload of money. It's really nice, but you've got it's not even enough to buy a house, right? So you can put a deposit down, you can help put kids through school. But if you've got 10 million, that's pretty good, but you're not going to give away, half of that, I wouldn't have thought, but you might give away 10%, maybe something, 20%, 10%. That's called 10% when you've got 10 mil. But if you go to the other extreme, if you've got $1 billion, if you give away 90%, then you've still got $100 million, which is more than enough to have an incredible life, right? So I think not that I'm saying you have to give 90 when you've got $1 billion, but the capacity to give just changes substantially as you have more and more wealth. So I think kind of giving people that kind of those two extremes allows then people to go, okay, well, in between there's a bit of a sliding scale. I don't think it's linear necessarily, like it's probably a bit more exponential like that. But then they can go, okay, I don't have to feel bad about some guy that I know that's done X% because they're in a different financial situation, right? So just, again, having those conversations with people, I think is something that's important and something I try and do when I can.
Like you said, such an important conversation to have because we don't really discuss it or talk about it enough. And, I think a lot of people also think that like I have to wait until I make it. To be able to give. Like I love your perspective on that, which is, it's not just financial, you can give in terms of your time and resources, all of those sort of things as well. I'll just finish off with like a friend of mine who's kind of like a mentor as well, does a lot of this. And, one of the things that he kind of spoke about is with a lot of just energy in general, you kind of like to get those things, we often like wait to have something before we kind of give it. But specifically with money, he was kind of talking about, instead of waiting for like once you make it to give a bunch of money, like if you're not going to, be willing to give up 1% when you have, $100,000, you're not going to give away a substantial amount of money, when you have a lot more as well. And so like part of that is just like also, like you said, kind of like normalizing a lot of these sort of things and kind of changing people's sort of perspective. And, I think similar to what we were saying earlier about that sort of very lonely journey that you can get from a founder perspective, like you just don't know what everyone else is doing. I think the more we kind of like hear people like yourself just contributing so much and having such a core focus, like I think it helps raise awareness for people to think about
and
it
kind of creates the habit too, right? The earlier you do it, you do it at whatever level and the level changes. And by the way, how you think about philanthropy, like you start off and you're like green, right? But then you've got to think about what's your purpose. Just like in business, you've got to think about like, what are we trying to do here? Because you can't give to everything. You've got to think about your purpose, and then you've got to think about who you give to and who you don't, and what are the criteria and all that kind of stuff. And it's a journey, right? So the earlier you get into it, the better you'll end up being. It's an interesting thing. By the way, the reason I called it Gravel Road it wasn't just random. I grew up in Warrnambool. I was where we grew up around our house. All the roads were unpaved, so they were gravel. So it was kind of a bit of a throwback to remember where you came from. But also I love the analogy of a gravel road. It's like when you're driving on them, it can be like smooth going sometimes, but then you never know if you're going to hit like a pothole or like a bunch of gravel and slide. And so this kind of like be prepared and shit happens kind of edge. But also the sense of journey and kind of who you travel with matters. Because I think for me, like the journey with people is kind of the whole purpose of the journey. Like if you didn't kind of have the people with you along the journey, I know, it just wouldn't be the same. It wouldn't have anywhere near the meaning or purpose that it does for me.
Yeah, no, I love that. Rob, once again, thank you so much for your time. It's been an absolute pleasure having you on the show. If anyone wants to find out more, say hello, get in touch with you, specifically around Glitch or otherwise.
Yeah, so Glitch is easy. So you can go, the website's glitchcap.com. Go there, you can see what we're about. You can submit, if you're a budding entrepreneur that wants to, pitch your idea, or pitch your deck, reach out for sure.
Perfect. I'll make sure I add those links in the show notes.
Yeah, great. Thanks.
Once again, thanks so much for coming on, Rob.
Cheers. Thank you.
Cheers. Thanks for listening to episode 213 of the Startup Playbook podcast. As always, full show notes from this episode will be available at startupplaybook.co. I'll be back next week with another episode, but in the meantime, if you enjoyed this interview, please don't forget to like, share, and subscribe. As always, Thank you for tuning in, and I'll see you next week.